you don't give birth to a 10-year-old, you give birth to a small baby, and day by day you just take the challenges that come your way, and it grows into something big. So that's the same thing with the developments I took on.
This is Property Investory, where we talk to successful property investors to find out more about their stories, mindset and strategies. I'm Taran Shum, and in this episode, we continue the conversation with Mark Ribarsky, who runs a successful buyers agency in South Bank, Melbourne, and offers a range of options for property investors, including development. Find out how you can start simple, then grow and build on your developments. Also, before we delve into this episode, go over to propertyinvestory.com and subscribe to receive your free property investor case studies, where you'll learn how to generate passive income from your properties. Go there now to sign up for free. For Ribarsky, his fears and his lack of faith in real estate industry held him back at the start of his journey.
I actually hadn't had a big belief in real estate coming into it, even though my dad was quite the opposite, and he kind of pressured me into doing that, and he'd help me with financing the property and actually selecting a builder to build the property for me, and then also help me find tenants and manage the property. So I just had a big disbelief, a big fear factor back then of the market crashing. It's pretty much just what you'd read on any newspaper site right now. It's always about how the market's either booming or busting. And those fears really crippled me as a young investor until I realised, I had seen the market, the capital growth in minor booms back then, and the kind of money that was generated from, in my father's wealth, purely just from the market moving up, 10, 20, 30% over a number of years, was more money than you could ever save. Once you start actually working and realise how hard it is just to save $1,000, you realise, this is a serious way to generate wealth, and that was really, just breaking through that mindset of failing and the market crashing was once I kind of got past that, it kind of just set me free, and I was able just to fly and just start buying properties and doing everything I was doing in the sense of developing and growing wealth.
Initially, he didn't have a mentor. He credits magazines as the primary source of his inspiration in his earlier years.
I guess in my early 20s, it was just like any kind of budding investor. Every time I took a flight somewhere or anywhere I had a bit of a trip on, I would basically go to the news agency or at the airport and buy those investor mags and have a whole bunch of them and read those magazines, and they were full of success stories on how people had succeeded in real estate. And that's something that really inspired me. I'd been to a couple of seminars here and there, read a few books, but nothing that does actually stand out in the sense of, I'm going to follow this person or they're going to give me constructive feedback. It was more around just getting in there and making mistakes and just being proactive in that industry. When I started out, things were a lot cheaper, and obviously making mistakes when things are, there isn't so much money on the line is a lot easier to recover from. And in this kind of market, when your entry level property is close to $1 million, you don't want to make a mistake. You don't want to kind of fluff around and make a kind of an average move. It has to be an excellent move every time. So luckily, right place, right time for me, and right price to be able to go in and out of markets and have a play with different types of investments.
Ribarsky has faced some setbacks, but strongly believes in the importance of not letting negative thinking get in the way of pursuing your goals.
It's just a matter of just taking that first step. There is no magic formula. It's just, like, for example, my first development, I shared with you earlier that I did a 3-unit townhouse site, which was, it was riddled with holding costs and, VCAT issues, and the project cost of building was blown out, and the whole time frame of the whole project was probably a year and a half longer than what I had anticipated. My first step looking at what I did there was just not worry about what could drag me down. I had made enough money from my first investment to help me fund this, and just bite the bullet and take the first step and put aside the negatives as to what can stop you, because the negatives can absolutely cripple you, and that's what I find with my buyer's agency right now. Every customer, or most customers I deal with, obviously you get some tenured investors that have no fear in buying property, but there's a lot of people out there that have I guess fear of the unknown. They're not buying houses on a regular basis, and they don't know the pitfalls and traps in I guess what can catch them out. And basically, I went into it just putting all that aside and just taking my second step into my second property, but my first development, and putting all the fears aside and just moving forward and taking it step by step. It's pretty much like a day by day thing. It's kind of like having kids. You look at it having a child and you think, oh, jeepers, what do you do with a 10-year-old? But you don't give birth to a 10-year-old, you give birth to a small baby. And day by day, you just take the challenges that come your way, and it grows into something big. So that's the same thing with the developments I took on. They started off with something very simple, and slowly I put plans in place to grow it and take steps in actually either renovating or planning and moving forward slowly till I got to a point where the next chapter unfolded.
The best advice he has ever received was to never get greedy and never financially overcommit yourself with loans.
It's more around greed, I guess. I had read a number of books on not so much real estate developers, but just wealthy people that have really been successful in life. And their general rule of thumb that I kind of learnt, and is my belief, is that people that are supposed to have wealth know how to look after it, and they know how to not get greedy. So what that means to me is that if a market changes and things go really bad in Melbourne or Sydney, that's actually not a bad thing. It's actually an opportunity to I guess generate wealth, and that's how the richest people in the world create wealth. They basically are not loaned out to their eyeballs, where they can actually make a solid move even if things are going south in price. And so you're kind of creating opportunity both ways. The market's going up and the market's going down. So what I'm trying to say is that I don't over leverage myself. I'm very concerned about debt. When I do take risks, it's a calculated risk for a short period of time, and my backup plan and my exit strategy is always implemented. It's never something that I change. And that gives me a lot of strength in the sense of, I've been doing it for a number of years now, and I have that luxury of being able to I guess, make a move either way, whichever way the market moves.
In terms of resources, Ribarsky has learnt a lot through podcasts and through builders who have been kind enough to share their experiences.
Podcasts just like this one, like yourself, you've got some great stories of people, and these are just normal people that have had that real estate experience. I've had a lot of that through my real estate career of just dealing with a lot of builders and them telling me their story. Like, we sit down while we're drawing up a contract, and they would tell me, oh yeah, I did this and that, and this is what I did when I was your age, and this is how I've gotten to where I am. And I think that's something that's really powerful. A real life story, not a glory story like you do in some kind of investor magazines and so forth, but this is like a real life story of the pains and suffering of owning real estate. And I think that's been quite a valuable learning curve for me. I have read a number of books over the years, but your typical kind of stories of like really glorified business people, like your Richard Bransons and Robert Kiyosaki and so forth. But they're quite readily available kind of reading across the globe that's very popular, and I thought it had a really good clear message for me.
Excellent. Yeah, I think podcasts are very powerful, and to be able to get inspired from these stories and take forth on them is the biggest thing that people can do, and to, I guess, maybe reach out, like as you said, to people and learn from them as well.
Well, every time I do listen to a podcast or read a magazine, most of it is in one ear out the other, but I try and retain one piece of valuable information that's actually going to make me better out of that. And in the sense of me, I mean my business, my investment portfolio, or how I can add value to my clients. And if you can remember one thing from from that episode. I think that's pretty good. That's a valuable thing that you can actually go in, and that one thing could be that the make or break one day of a project or a purchase.
Ribarsky's property development strategy includes starting off with a safe development project, determining the safety by checking the title and council permissions to see if the development is feasible.
So look, buying a property, if you look at your typical safe kind of development kind of project, buying a property that has the potential for subdivision is probably a great place to start. So like you buy your property on a 580 square metre block of land with a nice small house that's positioned right, and there's a whole number of checks that you need to do on the title and council checks to see if you can actually build on something like that. But that's a great place to start, because you don't have to basically do anything with the property until you're ready. So you could buy something and hold it for 10 or 15 years. And then when you're ready to do your next development, instead of buying another property and paying a huge amount of money, you've already got a block of land sitting there. So I think, that there is price or entry levels in price brackets of, all levels in the whole market. You could start in the outer suburbs, or you can do inner city, depending on how much money you have. And you can buy this kind of property that has that ability to subdivide later on down the track and give you those options and opportunities in future. So
simplicity is the key to property development when choosing your sites, as well as speaking to professionals in the local area.
A simple renovation in a small 2-bedroom unit at the rear, or proposed 2-bedroom unit at the rear, is a great way to do business, because it's the smallest kind of single level kind of property you can build that's going to have a very low cost to actually building, and a lot less headache than a duplex or a double-story development site, or a multi-dwelling site where you've got 2 or 3 plus properties on there. So I think the best spot to kind of pick something is just, in simple terms, you really go for something that has good access, and a good sized backyard and a small front house, and have a chat to a draftsperson or an architect that deals with that's local to the area. Essentially, they deal with the local council. They know the rules. They know the building code. That generally they give you a rough idea whether you could pull something off or not. Obviously, buyers agents or builders that have had experience in this are a great area where you can actually get answers on the feasibility of something like this. Real estate agents to seek, you can check market values of what a 2-bedroom unit sells for in the market, and whether it's worth your while doing something like this moving forward. But there's a number of different ways you can do it. But the first one would be is just keep it very simple and involve a draftsperson that specialises in this kind of work to draw up some plans, just some preliminary kind of proposals, and knowing building code and knowing the rules or something. They could tell you pretty quickly within a couple of hours of seeing the site whether you could pull something off or you couldn't, basically just to walk away and look for something else. The cost in hiring someone to do something like this is fairly. Look, it depends how many times you have to do it, but it's not that great considering what you could achieve out of it. I think generally they might charge anywhere from $300 to $500 to do a proposal for you, and that's a pretty safe bet. There is a range of things, a number of things that will come after that, but that is the first step you'd basically do, just to kind of see if you could purchase something that has that ability. And when it comes time to actually doing that, there's a whole range of things, but that's a story, I guess, for another time once you purchase. So,
coming up after the break, we'll delve into Ribarsky's biggest challenge when undertaking his first property development.
Especially when you put so much money and effort into a project, and coming to that point where you have a single person that could turn around and say, sorry, we don't agree with you, and stamp the hammer and basically say you can't do this project anymore. Is quite a nerve-wracking process.
What advice he would give to his younger self?
Instead of being worried about, things failing, just go the full Monty, and just really push forward and try your best in the sense of buying a better quality site.
And that's next. I'm Tyrone Shum, and you're listening to Property Invest Story. Hey podcast listeners, if you're finding this podcast super informative, then guess what? I'm giving you an exclusive free case study from property investors like this one just for listening. These case studies are from experienced property investors where they share specific strategies and numbers of their portfolio. Simply text me your email address to 04 99 88 10 40 to get your free case studies. Now back to the show. With a great amount of growth accumulated in Ribarsky's first property, the compulsion to sell it centered on the desire to speed up the process and use it to fund his projects.
The buy and hold is a great strategy, and I've done that with multiple properties. But I'm finding that obviously it's a slow process. It's like being a farmer. You have to wait for your crops to grow, and then you need to harvest it and then get paid on your annual pay. Growing property is even slower. You hold something for 10 or 20 years before you can actually take a really good return out of something. And through that time frame, you'll also face a down market as well. So you'll watch the property gain value, lose value, then gain value again. So I just wanted something that was, I guess, cut through that and speed up that process, and hence my desire to develop properties. Like I mentioned, I've done a number of property developments over time, and the funds needed for that came from the starting off point of owning that first property and selling it, and that funded a lot of my building. Every project I've done is requires well over $1 million in the sense of funds. So that's essentially the strategy that I did to kind of gain that extra kick or extra cash flow. And the goal of every development I did was to basically add value to a property, add a unit, renovate a house, or put multiple properties on and sell them off until we have one property that's positively geared, if I can say that word correctly. So essentially that was the goal of every development I've done. So I've still kept a property portfolio, but obviously we're keeping one property out of the two or three that we're building until we have a loan that's small enough for the rent to manage itself. And the goal of the whole process is, there's an unlimited amount of properties you can own if everything's positive gearing. But if things change in your life, and essentially things like your work circumstance, your cash flow, or you never know what can happen. Having debt is obviously creating risk in your life, and you want to try and minimise that as much as possible.
Unfortunately for Ribarsky, his first development project hit an obstacle when he was confronted by VCAT.
VCAT's a Victorian tribunal where if you have a disagreement of some sort with regards to developments or basically anything that someone's putting forward to for public building, I guess anyone from the public has that opportunity to argue that if you kind of can't come to an agreement. So it works the same way as like any court would, where you would have two parties that are opposing, and you'd face a judge and you'd explain your story and they would explain theirs, and the VCAT member or the judge would basically make that decision whether or not what's fair and what's reasonable, and basically award that to the people. The problems I had at VCAT were the neighbours. It's pretty simple. They basically just didn't want a development site next to their property. They'd had a block of land for I think a period of 15 years or something like that was vacant, and I think they just enjoyed that, and were pretty shocked at the idea of having a development site. But I thought I was adding value to the area, was my perspective, and I thought I was doing a good thing for the suburb. But we had gone to VCAT, and I presented my case and they presented theirs, and thankfully we'd done everything correct in the sense of our proposal, and the member awarded the project, and we were able to move forward and get our building permits. But it's just the process that was quite challenging. Never doing that before is something that you can, I guess, bring a little bit of uncertainty, especially when you put so much money and effort into a project, and coming to that point where you have a single person that could turn around and say, sorry, we don't agree with you, and stamp the hammer and basically say you can't do this project anymore, is quite a nerve-wracking process. So that was quite a tough challenge, being my first one. So
after overcoming this, he built 3 townhouses, and after around 18 months, he completed the proposal. But for those who want to follow in his footsteps, you need to keep the small hidden costs in mind.
So it was 3 double-storey townhouses, 3 bedroom, 1 bathroom, 1 garage or carport. And the first step after building was obviously, just like I mentioned earlier, it was just speak to a draftsperson, and they'd put a number of proposals forward, and we'd taken that to council. And back and forward after a period of 16 to 18 months, we'd actually achieved what we proposed initially. Then thereafter, there's a whole bunch of points that we needed to prep or make a preparation for actually building. So connecting things like water and power, and we had to move easements at the rear of the property. So easements are where I guess the stormwater is connected to. So we had to move that. We had to generate. We had to connect power from the other side of the road, and each one of these little steps had hidden costs and small headaches that were discovered along the way, along the journey. Every time we had completed one step or had one problem solved, it would create something else. So once you kind of come to that final point where you get the final stamp from the council, I think I had spent an extra $40,000 to $50,000 in hidden costs, in holding costs and site preparation.
Learning from this experience, Ribarsky believes that choosing the right kind of property is critical, as well as surrounding yourself with the right people to help you.
So who can help you? People like builders that have had experience. Obviously, myself being a buyer's agent, we offer the service to the public. And anyone that has actually really done it multiple times is someone that can really be a huge value to. So sometimes, you get your uncle or auntie or people that have done developments in multiple developments in your family. They're a great source of wealth in the sense of how to helping you buy something. Once you successfully purchase a property and you're sticking to your guns of what you want to do, the next big kind of guidance will be a draftsperson or architect. They can give you, save you so much time in a sense because they know the area, they know the council, they know what is acceptable in that area. And if I'll be looking for things like a draftsperson that has that experience, that has had 10 plus projects approved, and that they actually have the time to service you. So, for example, when you submit plans to the council, they'll come back at you and say, look, you need to amend these plans. They're good, but you need to do 25 to 50 different changes. And if that happens, your draftsperson needs to be available and they have to know basically have that experience and how to successfully pull that off. And that's why selecting that person is a big deal, and you should really interview them and ask questions about the business, how much work they have on, and their experience in that kind of work. So those two are the major ones in any development site. Obviously, the builder is just as important, but that's later on down the track. Once you come to a point where you've completed the plans, you've actually got something that's quite high value. Once you have that red stamp from the council, you've got something that you can actually sell without even doing a development site, because there's many people out there that would be happy to buy an investment property that's got tenants in there and it also has your plans and permits completed for another development site. And these kind of properties are really sought after by a lot of people in Melbourne. So
if you aren't keen on doing the development yourself, another option is to on-sell the property to a small developer for a good fee.
A town planner is someone that actually would work in council, and they would be the people that a draftsperson would submit their plans to. So, I think they hire their services out as well, and they're definitely a good place to get advice from. But I find that, especially dealing with councils, everyone's quite fearful of giving you an answer for anything because everyone's worried about legal liability. So approaching people in council is never really a great answer because they're just not clear. They're too scared to say yes or no. It's a whole bunch of this could be done, that could be done, but nothing is for sure. Whereas an architect or a draftsperson is just like a step down from an architect. But these people have actually gotten the approval many times, and you can ask questions like, "Can we do this?" And they can do all the measurements and calculate everything and actually give you an answer. Even though it's subject to council approval, they can be quite accurate in the sense of what can and can't be done with a property.
A habitual hard worker, Ribarsky believes an important personal habit he has is to get out there and do what he can while he is young and has the ability.
Hard work is just something that I do. I've always got my computer in front of me. I'm always scanning things, even when it's late night and everyone's relaxing watching TV. I'm out there. I just enjoy working. I guess I'm one of those people that don't know how to relax. Every time I complete a project, I say, look, I'm going to take a break for a while. I'm not going to do any more projects or do anything like that. And within 3 or 4 months, I've repurchased another site. And I think that's just something that's, I've got a never-ending workload, and I've never have that opinion of just taking things easy, because there's just so much opportunity out there, and why not take it while you're young and you've got the ability to work. Now's my time, and I really believe that just putting your head down and working is definitely the answer. So
yeah,
that's probably it's probably a good answer for your question.
That is the sound of success. So very, very normal.
It's pretty simple, mate. There is no magic formula. It's just, work hard and keep trying. I mean, even when you don't do so well out of something, you can take learnings, and the learnings are something that give you intangible value, so to speak.
So what would he say to himself 10 years ago?
I would focus more on, buying land that was higher value. Even though I did take the step of developing sites and being quite fearless in the sense of just moving forward and risking all those funds, I was a little bit of a chicken in the sense of how much money I spent on sites. So I would always buy in outer suburbs. I think my projects would have been a lot more profitable at that time. And just looking back at how the market went, had I purchased in closer suburbs to the city, so within a radius of around 8 kilometres, for example, whereas I was buying like 18, 20 kilometres from the city. So my feedback is, instead of being worried about, things failing, just go the full Monty, and just really push forward and try your best in the sense of buying a better quality site. That essentially is what I preach to my customers now. It's not so much about quantity, it's about quality. And that's what the market pays for. You can go to, I go to many auctions out there where you'll have 2 properties that are exactly the same in the sense of land size and house size, but one is just finished better. And the difference in sale price is phenomenal, because it attracts more buyers and more competition, and obviously the price goes up from there. And that's a learning that I wish I understood 10 years ago, which I just didn't get, and I do now.
For the next 5 years, he is most excited about his plans to continue reducing his debt and consolidating his properties.
Minimising debt, and that's essentially what I've been working on the last 5 years. It's all about doing a development, selling it off, and not owning too much. And it's very much the same. I mean, I'm just looking at different ways I can do things. I'm actually looking at consolidating my properties, selling everything up, and just buying a better quality property, in the sense where you might buy like a 600 to 800 square metre block of, or an old house in a suburb that's only a few k's away from the centre of Melbourne, and doing a really good quality investment. And it just, the overheads of owning less property and having a lower debt level is something that is really attractive to me, because owning multiple properties comes with its own headaches of bills and problems with tenants and so forth. So that brings on a daily basis. So that's probably the next 5 years for me, just kind of minimising debt and potentially minimising the volume of properties, but not decreasing in the value of what I own. So essentially just buying a better quality property that can really throw punches and do as much as 3 or 4 less value properties can. So
yeah, it's definitely all about the quality of the properties rather than quantity. I know property investors who only have maybe about 10 properties, but they're extremely good quality, and they've actually the equivalent of a property portfolio that has 20 properties, and it's less maintenance as well too.
When you think those people that have 20 properties, they get 20 rates notices. They get 80 quarterly bills for rates, for water rates. So it's a minor nightmare in the sense of balancing all that and just having an oversight of what's going on with your finances, and having a difficult time in understanding what's going on is never a great feeling. It can help you. It can lead you to make some pretty bad mistakes because you don't have that clear oversight of where you're standing. So,
if you wish to connect with Ribarsky and learn more from him and what he does and what he can do to help you in your own journey, visit his company website.
We're quite available online, so if you just look up Wise Real Estate Advice, we're quite easily found on Google, and we're actually across a number of publications as well. Our website's a great source of data on different projects and properties that we've purchased, and also just stories of investing and how people can actually learn from that. There's hundreds of pages of information that people can learn from. Obviously, just pick up the phone as well and give me a call. Happy to have a chat with anyone that's looking at starting out in developing, or even if you're a tenure developer and you're looking at, getting assistance. I mean, we're more than happy to answer the phone and give you that kind of feedback and advice. We've got a number of buyers agents that work with us, and that they're able to kind of help you. Doesn't matter, where you're kind of looking in Melbourne. We cover the whole metro area of Melbourne. So.
Thank you to Mark Ribarsky, our guest on this episode of Property Investory. If you want to hear more about his journey, then visit our website at propertyinvestory.com. Simply type in the search bar Mark Ribarsky and select that episode to learn more about his story. Also, if you haven't subscribed to receive your free property case studies that I only send out exclusively via email, then head over to propertyinvestory.com and subscribe. These real case studies are from experienced property investors where they share specific numbers of their portfolio, the strategies, and much more. Simply visit propertyinvestory.com to receive your free case studies. Thanks for listening.